Hey, so good morning. It's Sonya and Lori Williams with the Ottawa Property Gals, and we're lucky to have this morning Sue Hameed with Platinum Mortgages. You may have seen Sue on CTV Morning as a special guest with the Ask the Experts. So Sue, thanks so much for joining us.
Thanks for having me.
And also just wanted to find out a little bit about Platinum Mortgages, who you are and how you got started.
For sure, yeah. So over here at Platinum Mortgages, we're a team of about over 20 agents now. Our office is located at 1673 Carling Avenue. We have home agents, office agents in here, and we're meeting clients, of course, both in person and virtually now, depending on the circumstances and the situation. So we've adapted to the new normal, definitely, and business has been strong. We've been going strong from day one, and just trying to get the word out with as much information as possible because it's a very confusing time right now.
For sure.
One of the biggest questions we keep getting asked from our clients is how it's changed between before post-COVID to now with the lenders.
Well, definitely the appetite for risk is smaller. It has gone down. So what we saw during the first couple of months of COVID was private lenders were completely scaling back. They were really concerned about values and what's happening. And so there are a pool of private lenders who weren't even approving deals for about 6 weeks, I would say. Now that has eased up quite a bit. They're coming back. There's a little bit more of a comfort level. I think we're very unique in Ottawa in the sense that we haven't seen a slowdown. If anything, we're, as you guys know, increasing. Prices are going up. It's a very intense market. So I think the risk factor in Ottawa is not the same as other parts in Canada regarding values declining. And so what we have seen is a lot more due diligence from lenders, a lot more scrutinization of income. It's not easy. If anything, right now, it's more upfront review, more documents that we're looking at upfront with the client to make sure that we've covered every corner and that they're not going to have any issues.
Are they looking at their jobs too? What their actual job is, not just the income and how long they've been there?
Yes. So a lot of the responses we're getting is the type of industry the person's in. And, some lenders are saying, well, we have concerns of that industry post-COVID and a decline in income. And I've seen this, with personal services. I've had lenders say that certain personal services, they're not sure if they're going to go back to normal because they're not sure if people are going to be comfortable going back to using those services. So I'll use an example of a massage therapist. We've had lenders say, okay, well, how do we know that they're still going to get the same clientele coming in with COVID concerns? They might see a drop in revenue. So these are some of the things that are being addressed.
Wow.
Okay. And for people that have, sorry, Lori, for people that have already been approved and they have a closing date coming up, has that affected them as well? So they have to look at them again?
It depends on the timeline and the dates, and it depends if it's insured or conventional. So we'll start with insured. So if you were buying a property and you had an accepted offer before March 25th, and you're putting less than 20% down, it was insured, then you were not affected by COVID, even if your job was temporarily laid off, because you entered your contract and the binding agreement before the entire shutdown happened. The insurers, CMHC, Genworth, and Canada Guarantee, they stepped up and said, we are going to honor the approvals. Anything after the 25th is a different story for sure. So one of the things we're doing is when we're getting a file, we are getting the income signed off immediately, like upfront, first thing. And then if anything happens down the road, if the file is broker complete and it's at the lawyers, there are certain lenders who do not look back at files. And those are the ones that we're really partnering with right now, because it's very important that there's no last minute checks, even something as small as hours being reduced. And then the lender goes back the week before closing and asks to look at more documents. This is something that could, cause an issue in the file.
Crazy. What about, everyone's heard of the CMHC changes for July 1st. Can you tell us about that?
For sure. And the panic, there was a lot of panic initially with the announcement, but then there was a lot of relief when we found out that the two other insurers, Genworth and Canada Guarantee, were not following. So everything we talk about right now with CMHC, it's not all inclusive. We still have two other insurers who are operating as per normal before July 1st, But what CMHC did, the major change was the minimum credit score went from 600 to 680, which is a huge change because the number of people who lie within that 620 to 650, 660 range, there's a large percentage of people who are in that credit range. And so that was very concerning because there was a lot of worry that Genworth and Canada Guarantee would follow them, and then anyone below 680 would just be out of luck for purchasing an insured mortgage. And the other change CMHC did was the affordability. So instead of allowing the debt ratios to go up to 39-44, effective July 1st, they scaled it down to 35-42. Okay. So this makes a huge difference in Ottawa. I mean, we're already on the brink with so many people because the prices went up. And so reducing that reduces their affordability and then pushes them out of the range they need to be in. So I would say the beginning of June, massive panic. Everybody said if they were looking at buying, they had to get in very quickly. But when Genworth made a statement and then Canada Guarantee made a statement that they are not changing anything and staying status quo, it was a huge relief because we reached out to all of our clients and said, don't worry. You do not have to, put an offer on something by July 1st that you hate just because you're trying to get into it, right? So it was a huge relief.
We were very busy then. Everyone was a bit worried, and the prices were up. The bidding wars were high. Yeah.
For sure. Yeah. But I think that that's subsided a bit. There's still some people who think it's across the board. So it's super important for them to know you're not pushed out of the market July 1st. We still have other options.
What about line of credit? Did that change with CMHC too, or is that?
It was, yeah. So CMHC no longer is allowing a borrowed down payment, but Genworth still has that program, and they're still operating it fully. So it's not out of the spectrum for sure.
Okay.
Great. Oh, sorry. What were you going to say, Lori?
The biggest question we keep getting, and there's no answer to it, but I'm still curious where your thoughts go on this. Everyone always asks us, so where do you see the market going in the next year or two, especially once the government starts, getting less nervous about making some changes?
Yeah, well, that's the unknown, right? If more changes come down the line, more restrictions, this is the unknown. We don't know. What we do know is that they've been imposing more restrictions since 2016, like more recent restrictions, and that hasn't really affected our market. And so it might have affected, Toronto and Vancouver and some other larger markets, but it hasn't affected Ottawa. Ottawa's remained pretty strong. So what I can say about the future forecast is we're being told that rates are staying low. 2020, 2021, the predictions are that there might not be any rate increases till 2022. Of course, that's speculation because a lot of things could happen post-COVID that we don't know how the economy will turn around and what will happen from there. But the prediction for right now is I think people can be comfortable that rates are going to be low, at least for the next 6 months or so, because we're in this environment where everything is trying to rebound.
Okay. And are you seeing more conditional offers as well? Like not as many, offers without any conditions? Are you?
No. No, I wish, but no, we're seeing more firm offers for sure. Yeah. And this is something that's just happening in Ottawa right now. There's a lot of competition.
Yeah.
And the only time I'm seeing conditional offers, I would say, would be with higher priced homes.
Yeah.
Like much higher, I'm saying, over 700, let's say. And if it's like a mixed use kind of property, it has a commercial component, these unique properties. But other than that, almost every single deal is coming in without conditions.
Country home?
Country homes a little bit have,
A little bit, actually. I just spoke with a client the other day who said there was bidding on a property in Kempville. So.
Yeah. Oh my gosh, there's been, country properties are seeing multiple offers that they've never seen before in different areas. It's pretty crazy. Yeah.
It's keeping us busy. A lot of people want to move out of the city now.
Well, the prices are becoming higher in the city, so people are starting to look at the country setting. I also think COVID has done that because you've been in your home so much that you now want space and country setting.
A lot more people are working from home now too, and they're finding they won't be going back to an office, so they can broaden their search a little more, which is great.
Absolutely.
Yeah. Well, thank you. So, Sue, what else can you offer? So, obviously, you can refinance a mortgage. Help people with new mortgages, lines of credit. What are the types of things that you like to?
Yeah, in addition to that, we're looking at a lot of renewals right now, even people who are renewing next year or the year after, because the rates have dropped so much.
Right.
If you're, in the 3.25% to 3.5% range and you have a year or two left on your mortgage, your penalty will likely be small.
Okay.
And if you can get into the low twos, it's definitely worth it. And it's worth it not only for interest savings, but cash flow. Like right now, everybody needs cash flow. They need that extra money after recovering from, being shut down, not being able to go into work. So we're doing a lot of those. Second mortgages as well. That's something that is coming up a lot more recently, just because people want to consolidate some debt, increase the cash flow, and be able to get to their renewal date more comfortably. So a lot of the focus now is on budgeting, I would say, and helping people get through the next 6 months to 1 year. There's a lot of financial strain right now.
Yeah, for sure. Okay, so where can we reach you? I guess the easiest is through your website at.
So my personal website is www.mortgageswithsue.com. There's an online booking form there. You can schedule a consult virtually or in person, of course. And we are, happy to meet however clients want to meet at this point so that they're comfortable.
Yeah, and you were one of the first ones to do virtual even before all this started. So it's great you were set up so well for that.
I had the idea back in 2018, yeah. So I set it up in the beginning of 2019, and I'm fortunate that we had zero transition when everything shut down. We were already operating virtually. Even our client files and our communication is all virtual, so it was not a difficult transition on our end.
Yeah, thank goodness. You're always thinking ahead.
Yeah, and I think one thing, if we have a little bit more time to mention, is deferrals. So people who deferred their mortgage or their loans. And we're in that time right now where we're just starting to see how the lenders are evaluating it. It's still very early on, but I actually blasted all of our lenders with an email asking them to provide their position on deferrals. Because it's a gray area. And even now we're not being told a very clear guideline, but we are being told it's case by case. So what I will tell people is that if you've deferred a loan payment or a mortgage, it is coming up on the credit bureau as a deferral due to a natural disaster. So initially when, the government announced you can defer your mortgage, defer your payments, it wasn't explained to consumers, I think, properly that there will be a history of it on file. And so this is why we're being told everything's evaluated on a case-by-case basis. If you were, genuinely off work or your business was affected by COVID, then there's an explanation behind the deferral. But what we're seeing is many people who deferred their mortgages and the loan payments, even though they continued working and continued making income. Oh, so wow. So these are the cases where the lenders are going to scrutinize more the application, and it is working against some people right now. So my advice is, if anyone had deferred their loan or mortgage payments, but they have the funds to bring everything back to date and clear it off the bureau, they need to do that before they start shopping around for a property.
Okay. Wow.
That's important.
Super important. And I don't think it was communicated clearly enough. I think at the beginning there was panic. Many people deferred just out of panic. They were worried about their future, which is understandable. But now people are jumping back into the market, and it's important that they know how it shows and how it reports. Every single person I've spoken to, like I had a week where probably 70% of the credit bureaus we pulled were deferred. They had deferrals on them. It was high.
Wow. Well, definitely important to contact you and ask questions for sure. Yeah.
Thank you, Sue. That was awesome.
Yes, thanks so much for joining us. We really appreciate it. We know how busy you are, and definitely reach out to Sue if you have any questions about your mortgage or purchasing a home, refinancing, or mortgage deferral, and she's happy to answer.
Absolutely, I'm here to help. Thanks for having me on.
Thanks, Sue. Talk to you again.
Okay, for sure. Take care.
You too.
Bye.